The return of inflation is going to be a big conversation in 2018 given the broader macro implications and overall risk to financial markets. At the moment, inflation has been subdued, and this has afforded central banks the luxury of holding off on more aggressive policy normalizations. At the center of all of this is the U.S. economy and the persistently depressed levels of inflation that have challenged the Fed's transitory expectation of subdued inflation. And all of this has helped to propel the U.S. equity market to record highs at a consistent clip since 2013, with this move getting going all the way back in 2009. But things are changing a near decade after the global financial crisis, and this onset of policy normalization, however slow, has set those wheels in motion. The Fed would like nothing more than to normalize policy at a slow and gradual pace, but if inflation does start to creep in, it's likely to shoot up rather quickly once it does, and the Fed will be staring at policy that has no choice but to normalize more rapidly, all while stocks are reversing sharply after years of being artificially supported. And there are signs of inflation starting to work their way back around the world, which warn of the return of inflation in the US. UK inflation has already started to move up, and today we saw a much hotter reading out of Norway, along with a December minutes out from the Riksbank in Sweden that had the central bank mulling the start of policy normalization. And something else has been going on out there that should be watched closely as well. Commodity prices have been back on the rise, led by surging oil, which in dollar terms has just taken out the 2015 high, looking poised for a big run. Gold hasn't been far behind either, and if this continues, it could bring on that inflation the market hasn't seriously been considering all these years. We continue to see big risk out there in markets in 2018 as the market is forced to stand on its own 2 feet while contending with this reality that though it has been gone for such a long time, it certainly doesn't mean that inflation won't come back. Investors have been immune to any and all downside risk over the past several years, but this is a reality that looks like it has reached its end. As far as today's price action went, we did get a little taste of some risk-off flow, with the yen leading the charge on the currency side. The buck was mostly back under pressure as the euro put in an impressive recovery, though the pound suffered just a bit as the discouraging trade data out of the UK offset positives from industrial production. The news that China may slow down or even halt its purchases of U.S. treasuries was definitely behind the renewed wave of U.S. dollar weakness, and an important story that will get more attention in the days ahead. Looking at Thursday's calendar, Aussie retail sales, Eurozone industrial production, U.S. producer prices, and U.S. initial jobless claims are the key standouts. That's all for now.